Welcome back to the channel. It's me, Adam. What a crazy week in the market. So much happened. We're going to get right into it into this video. If you're new, welcome and hit that subscribe button. And as always, smash that like button. Firstly, we're going to be looking at the US dollar currency index, the DXY, and this pushes the US dollar against the other main currencies in the world. You have the yen, the Canadian dollar, the euro, and so on. And this one has been steadily climbing up ever since we had a double bottom earlier this year, and it was a pretty big double bottom we see from early 2021 and the middle of the year, May and June. So we hit a support back around 89. It went up to about 93 back in March, came back down, tested that same support about 89, and then from there it's been ripping up higher. And I'm sure you're no stranger that Friday was a pretty big red day in the market. No one was safe, including the US dollar also dropped from 96.67, dropping as low as 95.8, and then going back up to about 96. And taking a look at the VIX, we just crushed through that 20 zone resistance, jumping up all the way to about 26, reaching as low as 24, and then ending up at 28, right at that resistance point where the previous times also were. And that's the thing about technical analysis. See how perfectly those three line up over here from November, September, and May. But what we noticed is we don't have gap ups that are this big. Actually, you know what? The one in September was a bit of a gap up, but we do see it was a bit of a shooting star or a pin bar, whereas over here it looked like the fear just increased over the day. So this week, Monday and Tuesday are going to be very interesting and important to see whether the fear increases or if we begin to calm down toward the downside again. When we take a look at the PCC, or the put-call ratio, finally we're above the 0.9 mark. So what the PCC, it's the put-call ratio. So when there's more calls in the market, that means a lot of options toward the long side are being open, and Wall Street doesn't want to pay those out. So often it's like a fear and greed index. The more calls that are being opened, the more greedy the sentiment is, and the more puts that are open, the more fearful the sentiment is. And we can see that actually when we look at the fear and greed index on CNN. So right now we're at fear at 31, whereas the previous close we were at 64. So just to see how fast sentiment can change, going from 64 all the way to 31 in one day, just from that massive spike. Again, we see the spike in the VIX, which is also known as the fear index, as well as the put-call ratio, a lot more puts being open than calls for the first time in a while. And not even the 10-year Treasury note yield was safe from this news either. And it kind of makes sense because with this news about a new variant, there's not going to be as much spending, which isn't as good for the economy. But then again, with less people spending, perhaps that would calm down the demand side of all the inflation that we're seeing right now. So we could draw a line right here at about 1.4 and another one here at 1.7. All right, the Fang Index, Facebook, Apple, Amazon, Netflix, and Google. No surprise, this one was down. Equities took a big beating. So right below that 20 EMA, we see more of a sell-off on Monday. This could easily go back down to the 50 EMA. And then in the past year or so, whenever the price is below the 50 EMA, it's tended to be a very nice, strong buy. I mean, this could be the exception. Perhaps we're beginning a new downtrend. But that is something statistically that we have to take note of. The Dow Jones gapping down the 50 EMA. We were below the 20 EMA, and then we just sliced through the 50, not even touching it, just gapping down all the way. So we'll have to see early on this week whether we continue selling off or we have a bit of a recovery. The S&P 500 gapping down below the 20 EMA, not quite below the 50, but again, another indecision candle in between both of them. Again, Monday and Tuesday are going to be very big indications as to where this market wants to go in the short term. The NASDAQ actually didn't gap down, and we're actually sitting near a point of potential support around the 389, but again, depending on how the week starts, like the rest of the market, if we continue seeing more down days, then we're looking at this potential area over here, which was the previous resistance, which could be coinciding with the 50 EMA. If not, then we're slicing back down even further, perhaps toward the 370 mark. Looking at the resistance back from the summer from August could be a potential support line, or the bottom of our trusty channel from the previous year. And I've been pretty bullish on this market. I've been bullish on IWM. I was thinking there was going to be a pretty big recovery. Again, no one can predict the news that happens. But same idea. In the short term, this one can continue getting clobbered down. In the long term, I'm not worried. Valuations are just getting sillier the lower they're getting. The IWM index, I'm definitely keeping an eye on and taking a look at crypto. Firstly, Bitcoin. So this, and just like everything else, there was nowhere to hide. Crypto was no exception. Bitcoin got clobbered. When we look at the 4-hour time frame, We were hovering around 60,000, then we just sliced through the 20 EMA again, and we're now finding support around this 54,000. But again, if we can't hold this line and we get pushed down by the 20 EMA, then we can continue going further down. And similarly, the crypto fear and greed index is now at 27. Yesterday it was at extreme fear at 21, last week neutral at 49, and last month we were actually greedy at about 70. So we really have to hold up this 54,000. If not, our next stop could be around here, let's say around the $49,000, $50,000 mark. And that's just the way I'm looking at Bitcoin, is that I'm in it for the long term, just averaging in. I have my buy points. So when it gets to, for example, 48,000, then I'll buy some more. If it gets as low as 44,000 and then 40,000, and then have my buy points. And if it gets there, great, I buy it. And if not, that means it's going back up, and then I've averaged down. Ethereum, same idea as well. It has to hold this 4,000, 3,900 mark. If it doesn't, then we're going down to the next level, let's say at around 3,600. And at Cardano, this one, how low does this one go? I'd probably draw a line around this 150 mark where we are right now, where we could find some support, because again, we had previous resistance back in July of this year. If that doesn't hold, then we can go down maybe to 120 at that point. And looking at gold, I don't know, that is a weird candle. It's just a weird time. Usually when there's uncertainty, people rush to the metals. But again, the year is 2021, where nothing is off the table, where money printing and cryptocurrencies exist. So this candle is weird. I don't know what to make of it. It needs to hold this trend line. If it doesn't, then we can continue seeing more lows, maybe around 1750. Yeah, I don't even know what to say about that one. Silver, this one's a little bit more clear. With a trend line, it cut right through it. Nothing is safe. US oil, wow, this one was down 12.63%, and that does not happen for oil. I mean, look at the past year. What candle sticks out the most? This one over here. So we'll have to see how much this cuts into demand. Is this just way overdone, or is this a sign for things to come? And whenever the RSI was this low, it was a pretty nice buy. And we can see the last times the RSI was low, I jumped right back up. RSI was low, it jumped back. Even though it went back down, it did jump up right away. RSI was low, and then it ripped up higher last November and then September. Again, in the short term, it went back up, but then it was volatile until. So we'll just have to wait and see what happens for the rest of this week. Let me know in the comments below. Do you think this market is going down lower, or are we going to start seeing some kind of recovery? All right, guys, and I'll see you in tomorrow's video.